Thanks a lot.
Yeah, thank you. I'm changing, as you've seen. I've changed my background, so I'm a different person now, no longer part of the panel. But never mind, I could not help it just to say to Pelle, there is Gino coming. He's also from Switzerland. Maybe you already know each other, but he's representing a bank. So if you're a good old school salesperson, get in touch with him, because Gino will give us an insight on RegTech as an enabler for digital assets compliance. So Gino, here you are. The floor is yours. Good luck.
Thank you very much, Ken. I'm now going to share my screen for the presentation. I hope that will work. That should be working. Thank you very much for having me here today, and this great opportunity to also provide insights about how RegTech is actually an enabler for digital asset compliance. And myself, my background is on one side in traditional banking, but also in the fintech RegTech startup space. And here at Sygnum, I can combine both worlds. On one side for our in-house RegTech development, but also for the collaboration with external parties in order to deliver RegTech solutions internally. It's also a special pleasure for me to attend this event because Sygnum is not only based in Switzerland, but also in Singapore, and especially from a digital asset point of view, these are two of the most exciting jurisdictions to be in. Now, if we are discussing about compliance around digital assets, there are many facets around that. And it really depends on what is the specific use case. On one side, we have the cryptocurrency part of digital assets. And here we are inherently in the area of the whole AML requirements travel rule, as we have heard before from Pelle, a big topic. But then there are other use cases which are also triggering regulatory impacts. If you tokenize securities as examples, then you're clearly in the capital market regulations. So it doesn't matter whether you put just a tech layer on top of the securities to tokenize it, you're still in this regulatory field. And there are other topics, obviously tax compliance. You need also to have the tools, the reporting and everything in place that you actually can be compliant on that side, as well as various other regulatory requirements. For the purpose of this presentation, we are focusing on the first two parts, which is transaction monitoring, and we also will quickly touch base on the travel rule. Now, if you are a regulated financial institution or if you want to enter the regulated space, of course, you need to upskill and be ready to meet regulatory requirements. And it's kind of an obvious question why, but let's have a quick look to the challenges around that. Digital assets are a rather new class. They have been here for a while, of course, but the regulatory landscape here is quite heavily changing. You don't have like a track record of 20, 30 years, so there is not much of established best practice. And this is, of course, a risk which you have to face, that if you're non-compliant, because you're lacking this knowledge, then you need to face the consequences. On the other side, and this is especially for payment processing or cryptocurrency transactions, you also need to gather additional inputs from your clients. You need to understand the purpose of the transaction. And here it's hard to scale if you need to go by a case-by-case basis to collect each time this additional information. And last but not least, since we are using blockchain technology here, we have additional data points available, but we need to source them in a structured way that we can actually analyze them very efficiently. Now, in order to face these challenges and have a scalable business where you can benefit out of your digital asset offering, you need to have technology in place for that. And this is not just a statement which I am doing. Please be welcome to also have a look into this document if you haven't done so. Here you can clearly read that also FedF is the clear opinion. when you have to deal with larger volumes of transaction, that basically automated systems may be the only realistic method. But this is also important to point out. Technology alone won't solve any problems. You still need to involve human know-how in order to clear suspicious transactions. Now, if we group all these elements together, then the question is, okay, how can we have a setup, a framework where we can efficiently process transactions in the digital asset space? How can we make ourselves as an entity, as a bank, in this specific example, ready? And we have here an overview of a potential regulatory target operating model for digital assets. Let us start here on the top. For every bank, which is natural, you need to have a bank-wide risk management and governance in place. Here you need to understand what are the risks in general around digital assets. You need to update your risk management frameworks, and of course, senior management needs to be involved. And on the other side, on the bottom, as you can see here, you need to have specific risk methodologies for digital asset handlings. That means you need to have frameworks to classify the risks of the various tokens which you might need to want to support or to enable your customer to transact in. And you need to have risk classification for involved other service provider which you might engage or face as part of the transaction. And last but not least, you also need to understand how you actually define the risk of the specific transaction. As a regulated bank, obviously you should also align these plans with your regulator, and depending on your exposure, it might be also worth to point out these exposures to the public. And then, so if you have built the framework around, then you need to operationalize it based on a RegTech solution, as we will see in a minute, where you can actually scale your operations. You need to collect the data about the involved parties, the involved assets. You need to source data from internal, from external data providers. You need to analyze, and last but not least, you need to clear the transaction, or in case you have red flags or indicators where you want to have a manual analysis, you need to do the exception handling before you then actually can left the transaction out of your institution or accept them in. Now, to make this a little bit more specific, I'm going to walk you through such a process of this solution, which is called CAML, which is an in-house development, which helps us to really scale the number of transactions. And of course, if you have only a few transactions, you can do a lot of process steps manually. But if your main business model here is to actually be in the digital asset space, in order also to scale to a large number of transactions, you need to have RegTech solutions to do that. And initially, we deal here with the incoming transaction case. So when a transaction comes into your solution in your custody, so there are different ways then to do the compliance which is required. One of the possibilities are that you have actually a so-called quarantine wallet where you block all the incoming transactions, and then you start to look, okay, which data points do I need? Where is this transaction coming from? Who of my customers actually wants to receive that finally on the dedicated customer wallet, that transaction? And then depending on jurisdiction where you are, then it depends, is it a transaction of one of your clients? Is it a transaction of a third party? And is it a direct transaction from a private wallet? Do you have a so-called custodial wallet? Is it virtual asset service provider actually on the other side who is doing this transaction on behalf of one of their own customers, which might be also your customer, but it might be also a third party. And then basically there you start with the process, you collect the data which you need, and then you do your risk assessment You analyze what thresholds you're dealing with, what is the transaction history of the specific customers. You basically analyze all the data which is available in order then to do a decision whether actually this transaction is going to be approved, and in the next step then moved to the customer wallet, where then the customer can then finally dispose about the incoming digital assets. And with such a process, you can actually ensure that each transaction is dealt with, that you can have a clean audit trail afterwards to actually outline what were the checks you have performed and why you came to the conclusion that you actually approved this incoming transaction. After this transaction monitoring case, I'd like to go also to this FATF travel rule very briefly, as we have also heard in the discussion before, where the industry also has realized, okay, we need to pass this beneficiary and originator information, but we cannot use SWIFT as in the traditional banking space. So the industry, they had to come up with own solutions. And there are various initiatives currently going on. In one of these initiatives, in the Open Wealth Fund Association, we are also involved, and we are also establishing here solutions together with our partners to tackle that problem. And that was already the high-level overview about this very interesting area of compliance in digital assets with a focus on cryptocurrencies. And now I'm very happy to take any questions here.
Gino, I don't think I saw any questions in the chat. Let me have a look. No, nothing came in particular, but interesting as always. I would suggest that unless you have any last words to conclude, Gino.
Sure, happy. So in our experience, the regulatory requirements in the digital asset space, they are not so mature yet, although in the last couple of years we have seen much more regulatory guidelines, which obviously helps the industry, and the more players are entering the regulated market. So there is no longer the strategy about doing regulatory arbitrage, going to jurisdictions where you have lower regulatory requirements, as there is an alignment globally. So it will actually bring digital assets to more mass adoption, because it is becoming more and more normal for banks actually to get hands-on with digital assets. And as we also have heard in the discussion before, and also traditional banks are starting this journey, or already have started, and it helps the industry as a whole if we can improve here all the compliance frameworks, but not only the frameworks, but also operationalize it, that we can support more and more transactions.
Thank you very much, And Gino, thank you also for that short but powerful